What's going on, everybody? It is Friday. Friday Financial Thing live stream. As you can see, a new background because moved offices, relocated, doing a little bit of work inside the Casa del Financial Thing. So you may see the dog running around. There she goes in the background. But anyway, glad to be back with you today on Friday, this evening. I was having a little bit of technical difficulties with the stream to begin with, hence the unusual startup, but we'll hopefully get that fixed in the future. Hope you're all doing really well. Things to talk about. What are we going to be talking about this evening? We're going to do some peer-to-peer lending chat. As always, if you can hit that thumbs up, please, it helps out a ton. But yeah, I'm going to tell you about the single biggest mistake that I made peer-to-peer lending when thinking back all those years ago when I started in 2015. Started getting it into really heavy in 2016. I can identify one single biggest mistake that I made, and I think it's really important to identify this mistake because it has definitely caused me some financial distress within my peer-to-peer lending returns or lack of them in some cases. And if you're a beginner or you're looking to delve into peer-to-peer lending, I know a lot of people that come on the stream are kind of seasoned vets, but we do get people that watch on catch up, dog, be quiet, and people that want to get into peer-to-peer lending. And there is one single biggest mistake that I made, so I'm going to talk about that tonight. Also, one other thing too is we're going to kind of chat a bit, what's going on with the stock market. That dog is very distracting, but she usually sits in the back. You can't see her. But let's talk about what's going on with the stock market. Some thoughts about that. A little bit of thought about cryptocurrency and some other interesting topics today. Apologies for not being able to come on yesterday. We had some other things going on. But the main thing is here now. Hope you guys are all having a wonderful week. And let us get into it. We'll do a quick shout out. Hi, Patty in France on a sad day. Yes. Stephen Hale in Nottingham. Paul in Stockport. We got Peter Vince in Rainy Leatherhead. Mark Mason. Good evening to you. Robert Pates in Greece. Aki Chap in Accrington. We got all different parts of the world represented tonight. And yes, I agree. Very, very sad day yesterday for, I think, a lot of the world with the passing, of course, Queen Elizabeth ER no longer with us. And now we have Mr. King, Charles III taking over the British Empire. So I think we'll be in good hands with him, to be honest. Not everybody's a fan, but I think he's a decent sort. I think his mother, Elizabeth, did a really good job for her reign, and it is very interesting. On my mantelpiece, I have a letter that I wrote to the Queen when I was very young, and I was just kind of reading it yesterday, thinking, "Wow, what a historical event that through my entire lifetime, this person has been the ruler and reigning over the British Empire since I was born, and now that person is no longer with us. So it's quite the change. Very interesting, very different. But she had a good run, 96 years old. But hopefully she is resting in a better place. I know her health was declining, and hopefully she went peacefully. Hi, JM in Toronto. Nice to see you. Welcome to the stream. So we're going to do a little bit of peer-to-peer news and then crack right into some other bits and pieces of discussion. Let's see what we got. Anything interesting? Again, it's been really kind of slow in the peer-to-peer world, but one thing I do want to say is, what? Let me talk real quick about what the single biggest mistake that I made in peer-to-peer lending is, because I think it's very pertinent to some of the news stories that have been coming out regarding fundraising of these fintech companies who are hopping on websites like Cedars. They're doing capital raising privately And I think the single biggest mistake that I made when I was peer-to-peer lending was trust. Hold on. And I basically trusted the fact that I believed these people running these peer-to-peer lending companies actually knew what they were doing. And just because somebody is running a financial company or a fintech or an investment company doesn't mean that at the heart of it, they really actually know what they're doing. So when, of course, we saw these companies that went out of business, like Lendy, Funding Secure, the list goes on, right? But more recently, when I came to realize this was because of the cryptocurrency company in the US, Celsius, that went into administration. And that was a big, big company. I mean, they were lending out billions of dollars. The CEO would get on live streams every week, and he really appeared like he had everything in order. Such a big company, for it to go out of business, really made me understand what a mistake I had made in peer-to-peer lending, trusting the powers that be, that they actually knew what they were doing. So if you're getting into peer-to-peer lending and you're looking at the space thinking, why would I get into it? What is the real payoff there? Well, and then some people ask me, Lawrence, why would I not just invest in stocks versus peer-to-peer? Well, the problem with the stock market is, unless you're very experienced, you really know what you're doing, you have the possibility of taking drawdowns, which essentially means when the markets go negative against you, you can lose a ton of capital. And we've seen it happen, obviously historically, time and time again. What peer-to-peer lending offers is a way to, hopefully, if we pick the right companies, we can keep that capital intact and then collect interest. So obviously not like a bond. I mean, peer-to-peer lending is nothing like a bond. I would say much riskier in some cases, not always, because some bonds are very risky too. Take, for instance, London Capital and Financial, which went into administration and lost hundreds of millions of pounds. But peer-to-peer lending, if we choose the right companies, it can very, very much act like a bond, in the fact that we could keep the capital at a steady level, collect interest off of the payments, and we don't risk as much. Well, obviously, we don't risk really draw down in the sense that your whole investment is likely going to go down by 50-60%. Like that could happen in the S&P 500 or the FTSE. And I think there's a good possibility of a major market correction, really, which I think could happen at any time. Obviously, with peer-to-peer lending, you do have the risk that, if you dump all of your money into one or two bad loans, you're going to face that drawdown in that sense, that you could actually lose everything. But if you're smart and you invest in the correct peer-to-peer lending companies who are diversifying your investment across a bunch of different loans, the chances of drawdown then become very minuscule. What you do have to face is the possibility that that peer-to-peer lending company does go out of business, same as what has happened in the past. So I think the point of this is, don't trust necessarily that company heads or executives of financial companies know what they're doing, because in some they do get it wrong. We've seen it over and over again in the financial world. Even companies, huge companies, multi-billion-dollar, billion-pound companies going out of business in the financial world. It happens. Ask Lehman Brothers, all these big financial companies that went out of business in 2008 and 9 that are no longer with us. It happens. They make mistakes. Celsius did it. We had Voyager in the U.S. crypto company that went down. We've had it happen in the U.K. And, do your research on exactly how that peer-to-peer company works and how it operates. What are their books like? Are they operating at massive losses, every year? Are they able to sustain that? Do they have good financing? Do they have a way to turn those losses into profits in the future? Because, startup companies usually at the beginning are going to be in the negative as far as their profit goes, but a lot of good companies will have a pathway forward that you can find out what that is if you research and you look into those companies, how they operate. Do they have huge staffs? Like, some of these companies that we've seen no longer operational in the peer-to-peer retail space, like RateSetter, Funding Circle, massive staffs, right? Very high operational expenses. Where we see other companies what I consider to be a safer bet, like Loanpad, with a smaller staff, and they can run much leaner, lower expenses, and operate at a profit level in a much faster time frame than some of these big companies. Also, do your research into the people that are running the companies, which is something that, again, I did not do when I was starting out peer-to-peer lending. I should have looked further into who was running collateral, who was running lending, who was running funding secure. Do they have the expertise in the finance world, not just in the tech side of things, because some of them were on the tech side, but do they have the finance experience in lending and business loans and things like that to operate such a company? It was a huge mistake that I made not looking into that. So now I do a lot more research into companies that I invest through and really figure out, are they legitimate business people, and do they know what the hell they're doing? So, and again, even if you do all these things, what are you doing, dog? Even if you do all these things, there is a possibility always that companies do go out of business. They do go into administration. So don't put all your eggs into one single basket. Make sure you diversify, and just do due diligence as best as you can. Don't blindly trust even just because I say something is good. That's not financial advice. Don't blindly trust myself, anybody else on social media, or even your own judgment. Just do your due diligence and make sure your money is in good hands, because money is easy to lose and hard to earn for most of us. So you don't want it to be just flying away with the wind. Anyway, she's so active. What do you have? Wait. She's found a COVID mask. This is real life here. You see, nothing is recorded. Hey, do not eat that. 1 second. Nope. Small dogs will pick up anything, I found out. Anyway, let's get into the news. And I think some of that, what I'm talking about, really plays into a couple of news stories that we're going to look at this week. I have to do this manually because apparently my little screen sharing app is not working today, but here we go. So CrowdStacker Mole's fundraising in fourth quarter. This is another peer-to-peer lending company that is going ahead and plans to grow its business and launch new products. This is the thing that I think is important when you start to see these peer-to-peer lending companies fundraising. And I have no opinion on CrowdStack. I don't know really much about them. Don't use them myself personally. I don't know if they're good or bad. But you're going to see down here they write, to supplement our financial resources, the group is considering a future raise in Q4 2000. That's supposed to be 2022. It says 222. The funds will be used to provide a buffer and continue our strategic objectives. Very important word there, buffer. A buffer against what? Is that a buffer because you don't have much in the way of financial shoring, or you want to add to what you have? But key here, in the previous year ending 2022 at 31st of March, CrowdStacker saw its turnover growth go to 457,000, up from 422,000, but losses for the financial year amounted to 172,377 pounds, down from 206,983 pounds the year before. So again, you see this company operating at a loss. If you're a CrowdStacker lender and you do invest through them, do your research on a company like CrowdStacker. Make sure that their books are sustainable and that they have the financial duress to continue to take losses. Because look, I mean, turnover is not, you're not talking about a company that's turning over millions a year. They're turning over only a little bit less than 500 grand a year, where their losses are 172,000. So is that sustainable? And does CrowdStacker have the plans in place to turn into a profitable company. Because look, I don't care what company you are. Eventually, if you are making losses for a long enough time, your investors are going to pull out. And they're going to say, we haven't seen a profit for 5 years, 6 years. I'm not giving you any more money to fund these losses. So London financial bond company that went out of business, London Capital and Finance's administration fees have now hit 7.46 million by the 29th of July and are expected to pass £9 million before the end of the administration process. The administrators, Evelyn Partners, formerly known as Smith & Williamson, accrue fees of over £500,000 for just 6 months. It's getting expensive to be part of an administration process. Shojin, who you can see Jitin, we've had him on the stream before. He is to launch a Jersey incorporated fund later in this year as they plan to expand core offerings. Again, Shojin, peer-to-peer lending company, does property-backed deals. He wants to create a fund where customers can buy into a diversified set of projects through a regulated vehicle. To date, Shojin has raised over £34 million to fund more than £200 million worth of real estate development across 29 projects. Now, I will say this. I think Jitin is I hope I said that right. I think he's a very smart guy. I do. But I do have to be objective and say that when a company starts getting into things like regulated funds, it is kind of veering off what they started their company to be, which is a peer-to-peer lending company. And I've always said that I prefer, when I see a company, that I want it to stick to what it knows. You start getting into regulated funds and things like that, and now you have a whole set of other issues that the FCA is going to throw up, and the FCA is already difficult to deal with. So as long with Shojin also expanding into other countries, they certainly do have a lot on their plate for sure. Also, I'm keeping an eye on your comments. If you have any comments or questions. Hi, Dan Barber in Hayfield, High Peak. Very nice. Sounds like a nice place. I think Hayfield has a lot of rolling hills, if I had to take a guess. Richard McDougall. Hi, Richard. How are you today? He's saying, I downsized my peer-to-peer lending portfolio substantially recently. I felt the extra interest over increased savings not worth the extra risk. Although still well diversified, but doubtful current risks are worth extra percent. Question is, what are you doing with that money? Because if you go to cash right now, you're looking at 10% inflation. Savings accounts paying less than 2%, so losing 8% on your money every year. You do have to factor that into when you downsize something like a peer-to-peer lending portfolio. Are you actually going into the negative anyways because inflation's so high, you're just not getting anything through savings accounts? So you do need an alternative place to put in money. Where is that? Could be stocks, could be some cryptocurrency. So we'll talk about that a little bit later. Good comment. Let's see. Let's go back to our news. LendingWorks is rebranding as Floro. By the way, if you have a LendingWorks account, make sure you log in. And one thing I've done recently is set my withdrawals to be automatically every week, because sometimes I forget to go in there, manually withdraw the money as getting repaid through capital and interest payments. So go in, mess with your settings, and set it to automatically withdraw on a Friday, I believe. They are rebranding as Floro. Interesting name. The new brand represents an ambitious refresh strategy for LendingWorks. Another one of these bigger London companies that is no longer in the peer-to-peer retail space. Kuflink is planning to double its loan book by next year. I think they will do that. I think Kuflink is on the right pace to do that. They are hiring new people. They have new product launches coming up and a newly streamlined process. They plan to introduce second charge loans, which I wonder, is that going to pay higher interest returns? And they are beta testing a buy-to-let mortgages product also. They say the response has been very good. And this is one thing I did like about the second charge lending. It says the second charge secured loans are intended for consumers rather than developers. The average loan size is expected to be around £35,000. And as you know, I've never really been a big fan of second charge loans, but I think if they're £35,000, it keeps it very, very manageable, and I think that's definitely a good thing. So Kuflink this year has passed the £200 million milestone. You know, they're a company that's on my top 5 list. Not financial advice. I do like what Kuflink has been doing. Also, says Kuflink has entered into talks with some institutional investors, and that a new funding agreement may be announced in the next couple of months, or in the upcoming months. Very interesting. Kuflink getting into possibly an institutional credit line. Rebuilding Society, they have reported a significant net loss of £43,795 for investors in August. That means that, on average, that investors lost annualized 24.91%, meaning August was a pretty bad month if you were a real Rebuilding Society investor, which I have not been in Rebuilding Society loans for many, many years. They had no new defaults and no refactors of public loans in August, and the total capital still out on loans is 2.1 million, which 11.28% is currently in default. Rebuilding Society, keep an eye on them. Funding Circle sees profit falls just to 1.6 million after the COVID loan schemes end. This is one thing that I kind of thought would be a difficult thing for some of these peer-to-peer lending companies that have gotten into... Oh, that was lightning. If we lose power, sorry, it happens. Somebody's angry upstairs. But I figured, a lot of these peer-to-peer companies that went into the COVID loan schemes backed by the government, what would happen when those loan schemes end? And this is one thing that Funding Circle has seen has really hit their business hard. So their profits fell to 1.6 million. You know what? Good for them. They're still making a profit. But if you compare to the first half of 2021, they had a 35.4 million pound profit. So that's dropped 95%, and originations fell by 41% over the same period. I mean, they're still writing a lot of business, but for a big company like that, with big payrolls, big expenses, it's going to be interesting to see what happens with Funding Circle. Now, they are no longer in lending to peer-to-peer lending retail. European peer-to-peer companies have returned 12% for the year, in the year to date. That's pretty good. Some of those peer-to-peer lending companies in Europe definitely offer higher returns, I think more risk, but they are considered the 4th most profitable investment class in 2022. That's European peer-to-peer lending companies. It says the first half most profitable was natural gas, up 107%, then Brent oil, up 39%, and then peer-to-peer lending, 12% in the first half of the year. Cryptocurrency saw the biggest decline with a loss of 67.1%. Ouch. Also says in this report that cryptocurrencies and bonds together, according to experts, can bring the greatest losses. Not sure I necessarily buy that for the future. I think there could be a case for purchasing bonds now. If we do see a stock market decline, right, bonds, you would think, might be a bit of a safer place to put money. Now, again, not financial advice, but definitely some downside protection there with bonds if we do see some kind of a market correction. Okay, if you're enjoying this content, please hit thumbs up. Appreciate it. Thank you for joining the stream. We're going to keep going here. What else we got? Searches. Let's talk about the economy. Searches for apply for a loan rise by 295%. Google searches for apply for a loan have risen by 295% towards the end of August as the energy price cap and cost of living have spiked. This week, the British public have been faced with the news that energy prices are set to rise exponentially in the upcoming months, leaving many looking for alternative means to make ends meet. Some peer-to-peer companies are really going to benefit from this. Companies like Plend, Anyone doing consumer credit card lending, consumer credit lending, like maybe the money platform. So they could be places to look. I know Plend is still not open to retail, but they should be in the next couple of months. That could be some places to look for opportunities if you're okay in that type of lending sector. One thing I wanted to tell you is this quote, which I found excellent. And it says, in the investment business, it's very hard to do the right thing, and it's impossible to do the right thing at the right time. Very, very excellent quote, and something that I have been struggling with my own investments, because timing the market is just very, very hard. And the Trading 212 portfolio has, again, been really rocky, up and down. Again, very hard, very, very difficult to time the market. Extremely, extremely difficult. Let me show you what's going on in the portfolio, in case you're interested. I've been making some changes as I see what is going on. When I see reports like that searches for borrowing money is starting to explode. I see what's going on in Europe, and it looks like the US is in recession and the UK may be approaching a very hard recession. If Europe goes into recession, I definitely see a stock market, possibly the US and the European stock markets, going down. And I just feel more comfortable being in partial cash at the moment. It's just so many things pointing towards problems in the economies of some of these major countries and Europe. One of the things that I thought was very interesting, let me go ahead and show you this, was the ECB this week said, hold on, ECB ready to provide liquidity to banks, not energy firms. What does this mean? Like, why would Christine Lagarde say she's ready to provide liquidity to banks? You know why? Because the ECB is ready to bail banks out if they need it, because liquidity is drying up in Europe. But they will not provide it to energy companies. So very, very interesting comment. Let's look at what's going on in the portfolio. We saw this account value come down from mid 20,000 all the way down to 18,840 pounds. And I have gone ahead and we're sitting about 4,800 pounds in cash, looking for opportunities. Had quite a good run with these oil stocks. Arch has been very much up and down. I had high hopes for it. I still think it's going to continue to be okay, and being in the coal business. So there will be a longer term view on that, at least looking out to the end of the year. But nothing has really changed. The portfolio remains very concentrated, and going to cash is just really looking for an opportunity if we do see a drawdown in the markets, which I just get this feeling from what I'm reading and everything that's happening with the interest rates, the inflation, comments like that from the European Central Bank, the Fed in the US, who knows what the hell they're up to. They just can't seem to get it right. But it does feel like we're at a tipping point that could tip any given day, and these financial markets could definitely turn negative. Now, where lies opportunity? We talked about if you are going to move your money out of peer-to-peer lending or any sector, where do you go? Can't put it in the bank. Not all of it. The stock market looks toppy. Oil, I don't know, again, looks toppy. But I love this chart right here. You can go to blockchaincenter.net. And if you're a cryptocurrency investor or you are interested in getting into it, this is a great chart. And it really shows you these things from maximum bubble territory, sell signals, down here, buy signals, to basically a fire sale. And if you look at the history of the price of Bitcoin, where we've been, when we're talking about back on the early days when Bitcoin was just $10 down here. But these indicators are very, pretty accurate. So you can see right here when my mouse is, this was when we were at our kind of all-time highs, close to over 50 grand when we see in this sell period. And right now, down here in the 19,000s, we're in this basically a fire sale indication. So, you know, if Bitcoin's something you're thinking about dabbling in, it certainly, I don't think, would be a bad time now. Having said that, if the stock market does roll over and we do see a drawdown, this kind of all bets are off with Bitcoin too. There is a lot of uncertainty, but I've been accumulating at these prices. I think whenever we're in this blue area here, extreme fear, a lot of people don't have trust in this type of sector right now in cryptocurrency. But for those that understand the fundamentals and understand nothing has changed with the fundamentals, then in this blue area is really the pickup area for me. And also in cryptocurrency, we have this big Ethereum merge where for everybody that's been saying, oh, Ethereum proof of stake ruining the environment because it's electricity, it's proof of work, it's proof of work, burning electricity to mine it. Well, we're finally here, September the 15th, actually September the 14th. I think it's going to happen on the 15th, 5 days. Ethereum will become a proof of stake, a cryptocurrency asset, where you will not be able to mine it anymore. And in order to get returns off of it, people will need to stake their Ethereum, which is going to cut about 99.5% of the electricity burn off of Ethereum. Now, a lot of people are saying what's going to happen on the 14th or 15th when this goes through. Is there going to be a huge rally in the cryptocurrency market? I don't know. We'll see what happens. But it's definitely a place where you could certainly look to put some cash if you have it lying around. Again, understand the risk. Please do your own research. One other thing, just wanted to talk to you about really quick. I'm not going to go on too long today. Where are we? 32 minutes. Short one. Hit that thumbs up if you can. Appreciate it. Let's talk about this article about let me go back to my screen share. Sorry, I'm doing things manually today, so it's a little bit trickier. This search is for applications for loans. You know, seeing people struggling financially is to me is kind of heart-wrenching, you know, because I do follow some philanthropy. That's such a hard word. They could have made an easier word. Some charitable channels that do things for people who are living in poverty. And when you see things like this, searches for loan applications going up by 300%, see everything that's going on in the economy, the warning flags are flying high for people. And one of the guys that I've been working with recently, Tim, who, if you have been watching this channel for a while, you'll see the live stream I did with him a few months ago. He's a personal trainer who lives in London, and great guy. If you're in London, you want to get personally trained, Tim Robinson, he's your man. But him and I have been kind of thinking about what's possibly coming forward with a recession and how can we protect ourselves, how can he protect himself, and kind of cut his expenses and really dive deep down into where he's wasting money. And a lot of these people that are applying for loans and thinking about it could really benefit. And if that's one of you and out there and you're watching, you find yourself, you know, maybe you're not as financially shored up as you'd like to be, there are some really small things that you can do in your life that make a big difference. First of all, going and doing a budget, figuring out where is your money going every month. Tim and I did this, and we found at least 250 pounds a month of just wasted money on things like coffee. I mean, he was spending 125 pounds a month in coffee. So he told me about this really great money saving subscription, and if you live in the UK, you can sign up for this. This is £12.50 a month. You can sign up at Pret a Manger. I don't know how you say that, but you can get up to 5 barista-made drinks, coffees, teas, frappes, hot chocolates, and more a day. So 5 5 drinks a day, £12.50 for your first month, and just £25 after that. So if you are somebody that's looking to cut expenses, this is just one example of a great way you can do that. £25 a month, or you can drink coffee. I don't know if the coffee's good or not. I'm not a really big coffee connoisseur. We have some other similar things like that in the US where you can subscribe. It just makes a lot of sense. If you're paying £3 for a coffee, 5 or 6 days a week or more. Some people do it 2 or 3 times a day. They're crazy. You can do things like that to really cut your expenses. And I think that that's super cool. And Tim and I have really made some amazing progress in his budget. And we've cut off close to £250 of expenses that he was using, that he wasn't really using. Things like subscriptions to web services that he wasn't using anymore. We got rid of all of those, got him to sign up for the coffee subscription. So yeah, there's tons of things you can do out there. Just go do a budget, see where you're spending your money, and then just cut out all the crap that you don't need. And you'll be surprised how much of a difference that can make, especially if you're on a tight budget right now and things are going to get worse. Energy bills are going to be high this winter if you live in the UK. So maybe you're struggling a little bit now out there, but if you need to, you can drop me an email. I'll be happy to share some more things with you. Let's see if we got anything else. Oh, what are we going to do with this trading 212 portfolio too? Well, I think for now, my goal was always to get obviously this portfolio to be as high as possible in order to donate to charity on a yearly basis, which I've been able to do one time, and hope to be able to do that again soon enough by the end of the year. But I think now a decent cash position, probably for some downside protection, because we have seen some of these shares take some nasty downturns. You can see here from $19 we dipped all the way down to 17, a little bit less than 17.50 with Synovus. Arch has been just kind of a roller coaster from 170 down to 138. And I think there could be some opportunities here, just to sit in cash if there is a drawdown on these oil stocks to pop back in again. But just keeping a very watchful eye on any type of signs that we could see a stock market turn down. Things like the dollar remaining strong, going stronger, and the 10-year yield spiking, which is over 3%. That's always a warning sign. Look at the debt market if you want some good indications of where the stock market is heading. So yeah, basically just going to sit in cash for now and just play a defensive position and really see what happens from there. Anyway, see if you have any interesting comments. JM in Canada, think of the interest from peer-to-peer as return of capital. Should the loan get repaid in full? Only then you can claim the ROI. Agreed. That's why I like peer-to-peer companies that pay back capital and interest, and the loan gets drawn down lower on the capital balance, like Assets does that for a lot of their loans. John Day, welcome, John. Hope you're having a good day. Get it? No. Elfin Market have introduced their prepaid credit card for consumer borrowers. Do we feel that this will reduce their loan book quality in current economic circumstances? Let me look at Elfin Marketplace. I don't really know much about them either. Better peer-to-peer credit. Where's their statistics? Whenever I'm looking around at a peer-to-peer lending company, I always I head straight for the statistics page. Can I find the statistics page? That's the question. Wow. This is kind of cool. I have to show you this. Elfin. Hang on. I gotta get my little device working again so I can switch easily. Look at this. They have a dog on their team. That's pretty cool. Ha. Where is the statistics page? Maybe they don't have one. I can't seem to find one. Invest. Risk. Maybe it's under the risk. Okay. No. So I can't really comment, when I can't find the statistics pages on P2P lending just to do some basic research. It's very hard to comment on, how these companies are going to do in the future. Note to P2P companies out there watching, make your statistics page easy to find, please. Patty says, I hit it on the head. If you withdraw from P2P, where do you put the money? It's a question I ask myself on a daily basis. Yeah, I mean, just diversify, right? You can buy some stocks, buy index trackers, buy some cryptocurrency, buy some gold, maybe. I don't know, gold's not been performing very well. It's just tough. It's a very, very difficult time that we're in right now. A lot of unknowns. And the big question is, are the governments going to continue to prop up these economies or just let them fall naturally? I don't know. I really don't. Oh, are you working now? Oh, it's working now. There we go. Okay. My device decided to work. Paul Bagwith is better late than never, Paul. Yes. Why are you late? I have to put you in the corner in detention. It's, cash accounts just sit there devaluing by the day. I think I got a Ford Money email today saying that it's going up to 1.75%. Woo! So high, right? Paul's been out on a Groupon meal. There you go. There's another way you could save money. Go to Groupon. Or get your wife or your girlfriend to take you out. That's good. Paul says, Alpha Market do have a statistics page. Where? Tell me where it is. Maybe you have to be logged in to find it. Maybe I'll Google it. Hold on. I can't find it. Some companies, they put it behind, behind your account. You can look at the statistics, but I don't know if Elephant is like that. But I cannot find the statistics page. And updates to guests. I am still waiting to hear back from future guests as to sure updates for September. So as soon as I know, you will know. Anyway, that's going to do it. Please hit that thumbs up if you can before we get out of here. And I will see you next Thursday, hopefully all being well. Hope you have a great weekend. Don't do anything crazy. Yeah, that's really it. I don't have anything else to say, so have a great weekend. Thanks for joining. I really appreciate it. Just subscribe if you're not a subscriber to the YouTube channel and hit that thumbs up. Take care. Bye-bye.